And these are always
what is the probability
I'm gonna just
Noah
beatbox
not playing sound?
50-50.
It's
No,
pretty
I
high.
think you're giving yourself way too much.
It sounds great on my end.
Halftime report, and Noah always screws up. Halftime report, and Noah always screws up.
Oh, the joy I just had from
He
having
literally
that.
is trying to get into the Mormon Tabernacle Choir, isn't he?
I do like that.
I think from now on, I will not press that button just to make sure I get Mark singing.
Oh no! See, you're saying that, but we all know you'll just forget.
Of course, naturally.
Yeah, I like it though. I like it.
Welcome out, everybody. That means we are here live on our halftime report, our daily stock market show where we go through all of the news, the analysis, the charts, anything that's in the markets is grabbing our attention. And Noah, as always, appreciate you coming in and sharing. We'll see if you can get that sound on next time. I don't know if I want you to or not. I actually kind of enjoy this as well. And I like Mark coming in with that beautiful songbird singing voice. Mark, I had no idea you had such a good voice until we started doing this show. So looking forward to a karaoke night at some point in our future. Today, guys, Disney earnings, Square earnings, Apple had a downgrade. There's more talks about stimulus happening. They think that they want to make some kind of deal by the end of the week or set a timeline so they can pass legislation for next week. We'll get Mark's take on that. There's also going to be a bilateral conversation between China and the U.S. on 8/15. They were talking about whether or not China is holding up their end of that trade deal, and a lot of other companies in the news. So, how you doing, Matty?
Let me just help everybody else out there. They have not bought the soybeans that they needed to buy. Done.
Gasp.
Well, I don't know what those talks do mean one way or the other. I want to get Mark's read on that here in just a minute, but let's break down the markets one step at a time. By the way, if you're watching our show, you're a veteran, halftime crew, hashtag Team Tackle right in the chat. We appreciate you guys. Have a lot of fun coming in here and doing this every day. If you're brand new, there's a couple things I want to kind of talk about. Number one, click subscribe, click the bell, come back and join us. But we also got a live event here tonight, Matt. I'm very excited about. Actually, This kind of started on Monday through a conversation with the halftime crew here. And we're going to have some coaches joining us at 7 o'clock Eastern to talk about starting to trade if you got a small or limited amount of trading capital. Matt, talk a little bit about that event. I'm excited for it.
Yeah, I am as well. And I want to throw, I don't know who it was, but I think it was Dina, but there was a few others out there as well that made the suggestion on Monday that, you know, let's do a special webinar for people that are new traders, just getting started, low dollar accounts. And so I thought it was just an absolutely fantastic idea. And, you know, yesterday we called up all the coaches and, you know, got on Zoom. And, you know, I always love it when all the coaches get on Zoom. It's just like a bunch of just old school friends hanging out, making fun of one another and doing the things we like to do. But
was there 20 of us on yesterday?
Yes.
There was a lot of coaches on that meeting.
There was a lot of coaches on that meeting yesterday, but you know, I really appreciate them coming on and, you know, being very open to the idea of all of us getting on, because, you know, sometimes you want some time in between, you know, an idea versus let's do it. But I was like, you know what, guys, let's just all get on Wednesday night. Let's all show up and let's just have a little panel discussion on you know, advice to new traders, you know, because there's a lot of people out there in the market that are finding the stock market for the first time. And, you know, whether it was from you know, day trade or just the pandemic setting home, or, you know, the V-shaped recovery we had in the stock market initially, or the euphoria catch on, I don't really care what the reason is. I am glad, I do agree with Kramer, I am glad they found the market sooner than later, but they're also doing things that are not appropriate. Like all of us did, guys. I mean, Tim, I'm sure your first trade was a really dumb trade. And I'm sure let me backtrack. My first trade was a very dumb trade. My second trade was a very dumb trade. My third trade was a very dumb trade. But, you know, looking back, you don't know that at the time. You get an idea in your head and you just want to run with it, right? And so I see entire generations just getting interested in the financial market, but they lack the financial education from to a certain extent. And so I thought it was a wonderful idea, and I'm very grateful to the coaches for, you know, being able to turn around in a short time frame. But all of them were on board. They're all like, "Yeah, that is fantastic. Let's get on. Let's have some fun." So Veterans of tackle, show up, help out those rookies. You know, there were people along the way that helped you out as well. So let's all show up and let's have a great discussion tonight on, you know, trading and investing for the new generations.
Yeah, it's going to be fun, and looking forward to having a panel of coaches on. About a half dozen, I think, is going to be there. All of us are going to be there. I'll be hosting. Matt will be there running the screen, so I'm looking forward to that tonight. 7:00 Eastern. We do one every Wednesday. That's our Wednesday show. Let's get down to the markets. Actually, before we start with the S&P, we got to start with Disney if we can here. Bring up DIS, Noah, and I just got to point out.
This is so unfair. This is so unfair that the host gets to choose the topic. At the first, so solely so you can.
I'm not letting you get in and out here today. I know you've got some stuff going on at the house that might pull you away for a minute or two. So we're leading off with this. Last week, Mark, I think it was last week. It might have been the week before. We were talking
2 weeks ago.
We were talking about Disney, and Mark, do you remember when I suggested maybe they should put Mulan direct to consumers?
You did.
And they did come out with their earnings announcement here today. Mark, what was one of the announcements they made?
That they are going to release Mulan for $29.95 directly on their platform. So not going to release it to the theater. And the logic they used behind it was, listen, these movies are very expensive, right? Because one of the questions that they had in their conference call was, well, why don't you just put it as part of the sub to increase subs? And they're like, listen, we have a lot of expenses with these type of premium movies. And they were very honest. They're like, we're going to try this out. We're going to try this out. We don't exactly know how it will play. We're kind of doing this on the fly, but we're going to give it a go.
By the way,
it's going to be fascinating. And this has ramifications for movie theaters. This has ramifications for how we get entertainment. If they are successful, if they're not successful, listen, they won't ever do it again. They won't spend that kind of money on a movie and release. But if they're successful, it could be change how we get entertainment.
And Cody, will you go down and look up how much that Trolls 2 movie made on the direct stream? I want to get to know what the over-under is from that one, because that will give us some context on Mulan. By the way, Mark, I don't know if you remember, somebody was very critical of that idea here on our halftime show.
I don't know who was critical of that idea.
Thought it was maybe the dumbest thing he'd ever heard in his life.
No.
If you were in a boardroom and you suggested the idea, I would fire you on the spot.
Made in a boardroom, I would fire you on the spot. And I would have fired whoever made that idea.
Cody,
I didn't like it, but I will. Hold on.
My turn. No, I'm in charge right now.
Fine.
Cody, can you look up if Disney fired any executives today?
So basically, this is Tim saying, let's get down to business.
Listen, Tim hasn't won a game.
I'm just playing a little Mulan pun here.
Listen, let Tim have his day. Okay, he got beat in the podcast again. Let him have his day. But no, in all reality, though, Tim, you know, you were spot on with that. One thing that I did like in all reality, now that we have Disney's numbers, one thing I liked about the Mulan announcement, and one thing I did not take into account, so this is more on me, but it was a great call by UT. We don't know if it's going to be successful. Okay, no. This is a test, and Disney's running the risk of losing money here. Okay, so it is just a test. But I was thinking broad-based, like release it broad-based. Disney's not doing that. Disney is only releasing it in certain locations that don't have the ability to go to movie theaters, which is very, very, very important for Mulan, because there is a really big market for Mulan that can go to the theaters, and that's China. So they're still going to get the international revenue, especially that big revenue coming out of China on the international release from Mulan, while simultaneously testing in the US, going straight to Disney Plus. I think it's a cheap way with limited exposure for Disney to test releasing premium products on a paid subscription. That's number one, while simultaneously still getting that honeypot of the international revenue, especially coming through China. So you know, on further inspection of this, Tim, great suggestion by you. Good test by Disney. I still probably would have held it on the shelves to release on nationwide. I probably would have. but I still can see the logic behind the test. It's a decent test.
You know, it's going to be interesting. And I do think that's one of the key points, Matt, is that it's a limited thing that they're doing. If there is a theater, like you said, they can release it in the theater. And who's going to stop them from re-releasing it in a theater down the road, by the way?
No, if it's a hit and it's, you know, widely as seen as quality, they'll re-release it next summer as well.
It does beg the question on so many of these companies that have content on the shelf. What are they going to do? I mean, if this comes out and is very successful, I mean, this might be a game changer in terms of some of the way we even see media, Mark. I mean, it might change the way we approach theaters, things like that.
Wasn't Netflix already did that?
Well, not these new big releases, right? I mean,
no, I get it.
Paid, right? $30. Do you get to keep the movie? Are you buying?
Yeah,
I'll tell you what I would have done. I would honestly, I would have did a lost lead here on Mulan. I would have released it free to all subscribers and went for subscriber growth. What the market cares about more than anything on these types of services is subscriber growth, guys.
Mm-hmm.
They would make more money on subscriber growth revenue from market cap than they would on the revenue from, you know, a premium release. So if it were me in that suggestion that came into the boardroom, Tim, I would have really argued, and I might have lost that argument, but I would have argued for a free release to all subscribers and focused on subscriber growth.
Well, now that I know that you're going to keep the movie, I know that my wife will buy it the second it comes out. She would have bought it anyway, probably.
Oh, my wife's going to buy it too.
Yeah.
Yeah.
I mean, that's the thing, you know, $30 for a movie, new release, instead of having to buy one off the shelf. I mean, we usually pay $20-25 for some of those anyway, right? I think it's going to be a massive success. We'll see how the numbers come out. Outside of the Mulan news, which actually kind of grabbed the headline, there was actually a lot more interesting detail in some of the data that they released here. Maddie, give us the numbers on Disney, because I saw a big loss that they reported, but subscriber growth. What did you see in the Disney?
Well, they did show they were expected to see a loss of negative 43 cents a share, and they really did get hammered on Disney parks and those traditional revenue streams that Disney enjoys over the last 100 years. And so there was a big loss in some aspects of Disney's revenue streams, but that was offset by their subscriber growth. And I think that's what is impressive here. So they did come in at 8 cents a share versus the expectation negative 43. Revenue was obviously light at 11.8 billion versus the 15.9, and a lot of that miss on revenue, which accounted for a 41.8% decrease in revenue, was based on the fact that let's face it, they were closed down for a lot of quarter number 2, which is actually the third quarter report for Disney. But they came in above numbers on subscriber growth across all subscriber type platforms Disney owns. They have over 100 million subscribers now, but specifically on Disney Plus, they had a target when they released Disney Plus of 60 to 90 million subscriber growth by the year of 2024. Kudos to Disney. Mm-hmm. Now, obviously, pandemic helped this, but they hit, I believe it was slightly over 60 million subscribers on Disney Plus from last November until today. And so they obviously did really, really well on subscriber growth. And that's what these companies are focused on right now.
Marky, how'd you interpret the report? Obviously, Disney is one of those bellwether companies, Dow component, blue chip company, historically a dividend payer. The dividend will come back at some point. The parks will reopen at some point. The stock is obviously reacting in a positive, but we're not out of the woods on all the other troubles Disney might run into. But you got to like the price action. You got to like some of the news here. Mark, how'd you read this report?
I wouldn't chase it, right? I mean, it's a pandemic play. But here's the thing. You are basically paying the price you were last November, right? Mm-hmm. And we still have a pandemic. We still have societal changes. We still have things that are going to really add to the debt burden of Disney. Not a lot changed for me on Disney. What you thought of Disney before as a long-term play is the same you think today. The only difference is you got to pay a few dollars more. I
don't know. I think maybe one thing did change.
Know about that.
Yeah, the subscriber numbers, Mark, 100 million subs when they were targeting that by like 2024. I mean, you got to be impressed with that, right?
Well, I mean, how much of that forward growth are you pulling forward on that already with that? So, I mean.
Yeah, but you can make that same argument with every one of these stocks that are high flyers.
Well, I mean, I wouldn't call Disney a high flyer.
No, I neither would I, but I would say that's what the high flyers have been justifying to justify their price action for 3 months now.
You know, so I mean, but did you think Disney was not going to grow this quarter in a pandemic? I guess that's my point. It's like whatever you thought of Disney before, did you not think they were going to pick up a ton of subs? You know, on their, what is it, $5.99? What do they charge for their platform?
Well, it's about 13 for the Disney bundle, and that's what they're really tracking. I'm taking the numbers very positive, and I think you are looking at something that could be an investment opportunity. You gapped up above the 200-day moving average. That was on the overnight action. The cash open was really strong for Disney. The headline news is really, really bullish for Disney. There's not a lot of profit taking on a 10% upward movement in price. This is the first time since really the pandemic hit, when Disney, that the same day Disney kind of broke that 200-day moving average was when the pandemic hit. You're reclaiming that 200-day moving average for the first time with some strength. I do agree that I wouldn't chase it toward the highs of today, but if you see some consolidation, around that 200-day moving average, maybe a retest of that 200-day moving average, something akin to say what McDonald's did just recently, where it kissed off the 200-day moving average and showed some strength moving back up. I could definitely understand somebody coming in at these price thresholds on Disney. You want to exactly make the argument on Disney right now that they're a completely overvalued company and a high flyer and all that jazz. Obviously, their PE ratio is really high, but that's due to the loss of revenue more than the price. I don't know. I can kind of see it, and I can see the logic behind an investment thesis starting to grow in Disney. Although I do believe it's a little premature. Let's wait to see kind of at least a week after earnings and see how that 200-day moving average really holds. But I do think there is a difference with now that we've seen the numbers, seen that 60 million threshold hit 4 years earlier. You got to be at least a little impressed with Disney's numbers here.
Yeah, I think so. I know you've got old floor, new resistance, Matt. I would love that consolidation breakout at 130. I think from a trading perspective alone, not an investment conversation. Investing, obviously different thought process, and I do think Disney could be a good investment at some point too, especially if that dividend can come back and if they're successful with these direct launches with Mulan. We'll learn a lot about that.
So speaking of which, so I looked up Trolls, like you had said, the Trolls 2, the world release. So compared to the first Trolls movie, which made around 150 million in its first 3 weeks, Trolls 2 made only about 100 million. However, when they would go straight to box offices, Universal Studios only took half of the revenue. So of the 150, they made about 75 million. Whereas when they did the direct live streaming, they took home 80%. So they made 80 million. So they actually made more as a studio by doing the direct release than they did by bringing it to theaters.
That's interesting. How much is the cut of a direct release movie in these theaters, Mark, and AMC? Do you know? I don't know if you know.
I don't know the cut.
So what I'm reading based on what I was just looking at is typically theaters take around 50% of box office sales, varies between different theaters, whereas Universal Studios maintained 80% of digital rental purchase release for Trolls World Tour. So by doing the direct
Trolls numbers, the direct Trolls numbers.
The direct Trolls numbers in their first 3 weeks, they did around 100 million, and Universal kept 80% of that. The original Trolls movie did around 153 million in their first 3 weeks, but theaters took home 50% of that.
Man, I am so cheap. I mean, I cannot believe that many people just buy that direct instead of wait a few months, right? Like, but I'm apparently there is just a voracious consumer appetite.
There are some movies that I want to see right away, and there's some movies where I'm like, meh, I'll wait 6 months till it ends up on Netflix. Or
Mark, if Top Gun 2 was released direct, you'd buy it direct, right?
No, I would not buy it direct.
You'd go to
oh, come on. Yeah, you
Matt.
would.
I'd watch it that night.
I would literally watch it the second. We would crash whatever streaming service it comes out on because there'd be so many people who buy it that night.
No, Mark, I'm with you. I always wait for the movies. When I used to travel, I'd wait for them to come onto the plane. I can wait. I don't really care. I'm not a theater guy though, but I think a lot of people are going to buy this Mulan movie, and it's going to be a really, really important test. And that's a really good point, Cody. Thank you for grabbing the data on the split. I mean, if they don't have to share 50% of the box, Mark, now even whatever the numbers are, it's going to be more interesting to look at what they get to keep directly, obviously.
I mean, everybody is going to watch these numbers. It is literally going to be like movie theaters, Netflix,
test of
everyone in
time.
this space. It is going to be a fascinating test.
Yeah. Yep. Back on the market here for a minute. Obviously, Disney grabbed my attention. I did want to lead with that for obvious reasons, Matt. Just a little poke there, little reminder that I
No,
was.
no. Listen, you have your moment. You have your moment.
I called Matt.
You've now had 22 minutes of celebration for you. Congratulations. I don't want to take away from your moment in time here. I look forward to the next podcast game, and I'm actually going to try it on this one.
Oh, okay. All right. Fair enough. But then you did just try to take away from my moment right there.
No, not at all. Not at all.
Noah, break down the markets one index at a time if you can. Dow knocking on the door, S&P on the breakout here. NASDAQ, obviously, we're up above a little resistance point. Russell actually, the Russell's performing pretty strong here today, kind of right there with the Dow. Give me a flash through all the indexes. Noah, give me a technical read if you can.
Yeah, we got a pretty solid breakout of that 3,286 ballpark resistance zone, minor pivot. It's taken that out. We're seeing 3 consecutive closes above resistance. Nice little rising candlesticks. And I think there's not a lot of overhead resistance. You got an old pivot from back in January that's going to probably factor in here at the 3,340 ballpark, 38 ballpark. And then that all-time high, of course, is just the big benchmark. And I think that it may stutter step at this, intermediate pivot back here. And then I think it's going to, at some point in time, I think it's a foregone conclusion. It's going to retest that high. That's how bullish I think the bias is, even though I still feel like it's that hold your nose and buy environment. They get another deal done with some stimulus, it's going to go. Let's take a look at the NASDAQ real quick. Tech has just been so strong, and I love the breakout here on tech because this gives it new legs. Whereas on the S&P, I'm feeling like maybe it's a little overbought. The NASDAQ breaking a recent high. I love a breakout after a high base and some sideways chop. That really opens it up, and you've got quite a few companies, pressing to new highs. There's a lot of momentum in there, and it's been pretty modest on this breakout. So watch for a little retest in this zone and see if it can get some momentum trading with it. Let's take a look at the Dow. That is an ugly cup and handle, Tim. Nice little resistance zone for it to break. It's not a super clean zone because it's got this old resistance out here at 27,600, but it's just right there and it's poised for a breakout. And it looks like it's got a little bit of momentum in there off of all those moving averages up above. I like it as a pretty good looking bullish signal. I would worry a little bit about that 27,600 zone, but it's going to test that pretty quickly, I think. And then let's take a look at the Russell. Very, very similar to the Dow, where it's come and consolidated off of that 200 period moving average, and we're seeing it close up, and it's going to be testing that resistance here, possibly today or tomorrow, and we may see a little bit of selling in there. And if it breaks above that, I think it's got a clean shot to 1,600. So this is one of those things where those small and mid caps are finally following suit. And I think that this is where maybe you might see some sector rotation out of stuff that people are feeling that's overvalued, and they're looking for some value plays that you'll find on that index.
Hey, real quick here, Cody, I don't know if you're still by your mic or not. I'm having issues on YouTube on the stream here, and I'm thinking I'm getting that message here from Coach Emily, also from a bunch of people saying we're getting disconnected. Now, I'm getting an error message that basically, let me know if you guys are getting it as well.
I've been seeing the same error message too. When I clicked on it, it was giving me the COVID explanation.
I don't know what that means on the COVID explanation, but I'm getting an error code. Please try again later, playback ID, and then a bunch of stuff. Is anybody else getting that, Mark? And Cody, do you know anything about this? Cody's gone. Keep having to refresh the screen.
Yeah, and I've had to refresh it a few times on Chrome. somebody was saying in the chat that they switched from Chrome to Safari. And did that work, Brian? Are you still having good success with that?
I think as long as you just click refresh, it should come right back. But I think we're all getting that same error message. Looks like a Google issue on their end. Hopefully it works itself out. We're going to keep going through the show here. Hashtag Team Tackle. Appreciate you guys' patience. Sometimes YouTube does this to us, Marky. We don't always know why. Technology, I'll tell you.
And whenever it happens, I feel like the oldest, dumbest person in the world.
No, me and you both, bro. I'm like, okay, what do I do now? It's the thing I've said forever. Joe Rogan made a joke about it. If the grid goes down, we're done. Like, I don't know how the power goes on. I don't know what they do. So we'll see. We'll see if that fixes itself, guys. We're gonna keep pushing. Thanks for the technical read on the markets there, Noah. Mark, stimulus conversation, China, some other stuff I want to talk about, jobs as well. Just from a news perspective, what do we know about stimulus and the update at this point? I hear they've got some timeline. Minutia seem positive.
It looks like the most like, typical Washington, right? Not going to have a deal 12 hours later. We're making great progress. I mean, this is how these things go. It is going to be really interesting if China fades into the background. We get this deal in a couple days, and unemployment report comes out Friday. Fed meeting, don't have one this month. Like, if this all wraps up and there's this real calm, what does the market trade on? What are the headlines? When you get the accumulation of news, like, what happens then? What are the drivers? That's the interesting thing that I'm looking forward to, because what are they going to focus on? Like,
it's going to be that's a big looming question, in my opinion. If you get clarity from stimulus, the market likes it, doesn't like it, whatever, what will be the focus? It might just be the Fed put, Mark. I mean, from the bullish side of it, I think that's really their simple argument. There's so much money being flooded into the system. It creates upward mobility in prices. I'm looking across the stimulus thing here, Mark. Do you think Mnuchin's right that they will get legislation passed next week? If I put an over under on next Wednesday.
Next Wednesday? I don't know, man. Like, I don't know. I know it's an election year, and I know their normally scheduled August recess is coming up. So that I believe that August recess is supposed to hit on Friday. Now, everybody from Lindsey Graham to Pelosi to everyone has said that, hey, we're going to extend if we have to. We're not going home without a deal. And we know that they all want to go home, right? So it's an election season. They want to, these aren't individuals that work 365 days a year for you, the American people. So they probably want to wrap it up so they can go to their August recess. And those with campaigns definitely want to go hit the campaign trail. So next Wednesday, I don't know. I'd give it 50-50.
About a 50-50 on that one. We'll see if that ends up coming in. I know the positive optimism out of the commentary makes you think that maybe they're moving forward and whatnot, but you never know with politics and negotiations here, Mark. Noah, give me China. Give me FXI if you can. In China, let's talk about some of the things. I saw a headline here, Mark, very quiet on the Chinese U.S. talks there for a while, but they did announce they're going to have bilateral talks on the 15th. Is there anything there? I mean, Matt made the comment earlier. I agree with. They'll probably say, "Oh, you didn't buy enough soybeans, right?" What do you think this is all about? Is this a conversation that could escalate into something more? What's your take?
I mean, the only thing, like, because we're in election season, we're getting into the heart of it, and almost everything campaigns do, from the White House to your local congressional race, is going to be done with the election in mind. And so when you look at market implications moving forward, it all comes down, and this is the big wild card, is what does the Trump administration want to accomplish with China in the midst of an election season? Do they think it's in their best interest to do nothing, to not rattle the markets, to not rattle, or do they think it's in their best interest for more hyperbole and tough stance on China? That, your answer to that question will let you know what you think about the risk of China on the broad market over the next few months. And it's a tough one. It's a tough one, because they want both. They want high markets because you're the incumbent. Who doesn't?
Mm-hmm.
That would be true of any incumbent. But they also want, because it plays well with independents and Democrats and Republicans, a tough Chinese stance. That plays well across all categories. So I imagine they're going to try to thread the needle right. Tough stance, but nothing actually that would rattle the markets.
Noah, forexfactory.com. If you can next, I want to talk a little bit about some economic data. One of the biggest reports this week that will be coming out is going to be the unemployment report on Friday, August 7th. It comes out pre-market 8:30 p.m. Eastern. That monthly report, Mart, obviously we haven't really trusted the data here for a while. It's going to be very interesting on that Friday report, but we did get the precursor to that report, the ADP non-farm private, I believe, employment change numbers. And I got to tell you, I have no idea where they come up with the projections, but economic projections looked at I saw anywhere between 1.2 million jobs added to 2 million jobs added that they thought they were going to have. Mark, they did add jobs, 167,000. They were about 1.5 million off, and they cited lots of different concerns. Do you think this is, I mean, obviously the market doesn't really care here today. Is this just an anomaly in the data? Is it the way ADP reports it? Is it just this jobs market that we can't unpack any of these numbers and really have any confidence in them? I mean, how do you interpret
The only
something
thing
like
I
this?
know is that Friday's jobs report will come in better than expectations because Trump has already started to tout the big number in this Friday's job report. He's already scoreboarding it, which lets you know he has the data. He knows what the number look like. He's touting it. It's going to beat expectations. Yeah. So it's going to be on the surface a really, really good report. It was interesting if a really good report comes in, does it do anything to hamper negotiations in the stimulus deal? Let's say let's say they manipulate the numbers too much, right? And it looks too good. And then all of a sudden it's like, hey, unemployment's getting better. Does that do anything to harden stances in the negotiations and stimulus? That's the only real question I have, because I would be shocked if the Friday's unemployment report, regardless of what the other unemployment reports say, doesn't beat expectations.
Yeah, and obviously that Friday event is going to be the important one, and I believe that is an accurate assessment, Mark. I think they're going to come in, cook the books, as they say, or maybe just tout out some of the positive numbers. We'll see what those numbers are on Friday. The ADP numbers being ignored here today. I'll tell you one thing that is not being ignored, though, is the crude oil breakout and rally here. I don't know, is it on the backs of the data that came out here to Mark, or was there a different catalyst for crude oil? Crude oil inventories came out with a $7.4 million draw. That's above the forecast at 3.4, and very similar to last week when they drew almost 10 million barrels. We've seen supply being drawn here for a couple weeks in a row, market very, very aggressive levels. Crude is now up on that 200 period moving average. What was the catalyst here for crude? Was it the crude?
I think whenever you have geopolitical tensions in the Middle East, that's always serves as a positive backdrop for oil, and then you get a little bit better than expected number on the Wednesday report. All I see on the chart is a slap down from the 200-day moving average. So stick to your technicals on this one. That was a first test of the 200-day moving average, first test in the situations, widely hold. It's got to get above that 200 to get any actual traction. So I would not try to overanalyze this all, make this a strict technical. You have a technical breakout of horizontal resistance, but slapped right down by a moving average. Stick to strict technical analysis on this one, trading crude.
Maddie, you talked about the potential breakout here on crude above the 200, and you even said, I think it was yesterday, that you probably would not play that if it broke out. This is a little breakout of the pivot, but slapped down by that moving average like Mark talked about. Is there anything here in the chart? And Noah, give me an intraday chart. When did the price actually start to move? Was it overnight on that bombing, or was it, when did we get that breakout? Noah, what time was that?
Oh, 9 a.m. Tuesday.
So, okay.
That's about the same time as that. Yeah.
So yesterday we had a little break. What about this morning here? When was that technical break at 42?
2 a.m.
So that was overnight. That was overnight action here. Matt, what's your read on crude oil's chart here alone? I don't know if Maddie's back or not. Noah, give me a read on the chart if you can. Then.
I'm back to you. I just had it on mute for a second.
Yep.
There's nothing I see today in the chart that changes the analysis I said yesterday. I still think you're looking for the exact same thing from a swing trade or a position trade perspective. That 200-day moving average is so tight against that breakout that you just didn't, in my opinion, and again, this is just my opinion, but I just didn't feel you had the return to justify the risks there. I think the trade that has to be the technical setup that has to really form for me to look for a bullish entry on crude would be a break of that 200-day moving average, followed by the Cody special, the retest of that 200-day moving average. And so you tested that 200-day moving average. The wick kind of went up above it. But a lot of that price action, you guys correctly kind of identified the timing of it, is when we really kind of had that the Beirut explosion yesterday, which was, oh, wow. I mean, I'm sure all of you guys have seen that video.
Horrifying.
It is shocking.
Yeah.
I mean, I mean, my God, thoughts, prayers, just stay safe there. Just absolutely just shocking. But initially when it hit, there was a lot of confusion about what caused it. And, Middle East tensions and geopolitical tensions obviously are bullish catalysts for oil. That goes without saying. And so when it initially hit, the news was startling, and crude starts pricing it in to a certain extent. But then I mean, where are we at now on the news, guys? I mean, it does look like this was an accident, correct?
I haven't seen anything confirmed, to be honest. There was speculation out of the Trump administration that it was an attack, though, Matt.
No. There was not. It was not the Trump administration. The Trump administration said it was an attack. And I think Trump just misspoke on Twitter. That's all I think that was just misspeaking on Twitter. The Trump administration was actually very quick to say this was not an attack last night. And so right now, I mean, it seems like a fireworks factory, got into some tough situations over there, and obviously some negligence, I would say, right? Some definite negligence over there, but I don't, as of right now, I don't think that was an attack. So, it's just crude kind of came back down and kissed off that 200-day moving average, regardless of the reason behind it. I still think that 200-day moving average has to be broken with some volume to support the type of price movement, and then retest, kind of like what we saw with some of the stocks kissing off that 200-day moving average. So I think the trade setup here is actually fairly easy. You wait for a break of the 200, you wait for a higher high, and then you wait for the pivot low.
Mm-hmm. By the way, if you are watching our show right now, we are having a few technical issues right there on YouTube. I've confirmed it is a Google issue and a YouTube issue. The stream is going through. It's being recorded. You can catch the replay if you can't get it figured out. But I am seeing from a couple of Team Tackle members.
I'm having issues on it as well.
I think
it looks like YouTube keeps skipping out. So we're still live. We're still uploading to YouTube, but just the live stream skipping out. So if you missed any of this, the replay is there.
Yeah, I literally, I'm having the exact same issues. I got the death circle going around on YouTube, right? Yeah. You remember the red circle on the old Xbox One? I got that.
The red ring of death.
Yeah, there it is. I got that circle going on. But I do believe Spencer is right. It is an ammonium nitrate from a fireworks factory. That's, I think, what the speculation is so far, Spencer. And that's kind of where the logic kind of leads to.
Man, it was a horrific accident, obviously, and the videos on it, just startling, quite frankly. I will tell you, I read one of the most ridiculous headlines I've read in a long time. Noah, give me gold if you can. I think it was on Market Watch today. Gold up on Lebanon bombing.
Oh, my gosh.
On Lebanon accident or whatever it was. I don't think they were calling it necessarily an attack or a bombing, but they were saying gold was up on that news, which is one of the most ridiculous things I can hear. I get it. Global tension, Middle East. Historically, Matt, that would be a headline they could write.
At this point in the world, I mean, at this point in the world, I don't understand why anybody trust any headline that comes from any media organization. It's literally just fodder for the masses. It's nothing.
Like literally, you might not get your news and analysis from Tackle Trading. Do not get it from financial mainstream media. It's for numerous reasons. They have an agenda. They have ignorance. They have copywriters that spend 6 seconds putting up headlines. It's just, I hate to use the phrase, but fake news.
Fake news. Yeah. I mean, just the rush, I guess. I don't want to give them a pass as to why they.
It's not a rush. No. Call it what it is. It's clickbait nonsense.
Yeah. It's so
all
stupid.
it is. It is clickbait, yellow journalism. It rivals the 1920s. It is absolutely inappropriate. It's irresponsible, and they should be called on the floor for it. It's irresponsible behavior.
Gold.
Because the reality is gold has nothing to do with what happened in Beirut yesterday. Gold has absolutely everything to do with the central bank 1, the central bank 2, the central bank 3, and the government 4. And the central bank yesterday announced that, or hinted, which is basically an announcement for the central bank, that they are shifting the goalpost on how they identify inflation. And why that's important, ladies and gentlemen, and why that's important for gold ownership is that is the indication that the Fed is going to now target above 2%. So what they're doing is the Fed has a long-term average inflationary target of 2%. Now, what they're shifting to is to look at that as an average mitigated over time at 2%, which means they're going to actually target above 2%. For everybody in America today, the central bank is not your friend. They are your enemy. They are trying to raise your cost and make and that's what is actually happening here. But what you're really seeing from an interest rate perspective is now they're justifying low interest rates for the foreseeable future. Okay. They were talking about liftoff being next year. Liftoff is not going to be next year. Liftoff's not going to be the year after that. The Fed, and I've maintained this for a very long time, guys, I do not believe we will ever see a Fed fund rate at 2.5% in this edition of the dollar's history and future. I don't believe that. And so the Fed is shifting the goalpost on inflation. Now that inflation is becoming a concern, and all you need to know about that is look at the gold chart. Inflation is becoming a concern. So now the Fed is shifting the goalposts once again to justify their extremely dovish monetary policy in the past, and now to justify that extremely low monetary policy in the future. This is why gold is going up today, and why gold is going to go up in the future is because of central bank monetary policy shifting the goalposts from an inflationary perspective, let alone everything else they've done from a balance sheet perspective. So this has everything to do with the central bank, has absolutely nothing to do with what happened in Beirut yesterday.
And it is just infuriating. You guys read more financial news than probably anybody, that I can think of, quite frankly. Mark, Matt, myself, we all go through this every day, as traders, investors, and whatnot. Is it getting worse, or has it always been this bad?
It's getting worse.
It's getting worse. I don't think there's any question about it.
It's
It has
gotten
gotten. Oh, go ahead, Noah.
Oh, I was just gonna say it's gotten so bad. I don't really read the headline news as much personally. I just watch charts.
It's gotten particularly ramped up in the pandemic. It seems like people have an agenda, and that agenda isn't the dissemination of facts and good analysis. So you just CNBC, Market Watch, Reuters, you can't trust any of it. I mean, I just hate to say it. I mean, you might find one person on a show or one writer that you really like, and that's fine, right? There's good writers, there's good analysis. There's people I see pop on CNBC where I'm like, that guy seems, or that woman seems to know what they're doing. Those are the needles in the haystack of this mess that has become the mainstream financial media. They have agendas, plain and simple. So you would be far better off just to learn technical analysis. Sign up for that 15-day free trial at tackletrading.com. Go to tackletrading.com, sign up for it, and then go to Technical Analysis 101, learn to read a chart. That you'd be far better off to do that than watch financial media.
Yeah. By the way, silver next here. I want to take a peek at that as well. It is running. We're up at 26.68. These metals markets are hot.
Very quickly, Tim, can I just say one thing on the media real quick?
Yep.
Andrew Yang, the former presidential candidate in the Democratic Party, who I am becoming a fairly big fan of, just in terms of his straightforward talk. I don't agree with everything he says, obviously. I have a different political belief system than he does. but I am quickly growing my respect for Andrew Yang and what he said
Part of the
yesterday.
Yang gang? Is that what I'm
No,
hearing?
I'm not a Yang ganger. No, I'm not. But I can, even though I'm not in his political party, don't agree with a lot of his politics, doesn't mean I can't have deep respect for somebody else.
He's a good
And
guy, right?
and he is a really good guy. But he said on Twitter yesterday, as long as the media is a paid for profit media, we're going to have these problems. And I agree with that 100%.
I agree with that. He's one of the only Democratic candidates that was willing to sit down and interview with media from the other side.
Cody, he'll talk to anybody.
Exactly, which is the way politicians should be. But yeah. I agree with that statement.
Listen, I've been very critical of the Democratic Party over the last few years that they will not sit down with the opposing opposition, but Republicans will. Democrats need to go into the fire sometimes, and Andrew Yang will.
I'm with you. I like Yang and Gabbard. They both will talk with the other side, and I like it. That's the way all politicians should be.
Yeah. If you want to see your party expand, you should talk to the opposition. Democrats should do it more.
And Dina, yes, we are aware of the issue. I think everybody here in the halftime crew is aware of it as well. Some people have transitioned to using Microsoft Edge, which is strange to me that Chrome would have problems, a Google product, where Edge does not. And also Mickey says that he streamed it on his iPhone, is working a lot better as well. So it's being recorded, Dina, and whatnot. But yeah, we're aware of the issue. We're just going to keep working through it. By the way, the rest of the metals markets are also up here today. Copper lagging a little bit behind, cannot break out of that consolidation. But so give me silver here as well. Noah, I mean, I have no idea where the top is here. What do you do if you're long here, Matt? Do you just let it run? Do you keep going streaking?
Enjoy the ride.
Enjoy it. Trail a stop. I mean, if this is a trade, not an investment, how do you approach the move here, the upward mobility? I mean, we're up, $6 just since the breakout at 20.
If you're making the decision to trail a stop loss here, you trail it underneath 26.5. That's a very, very easy call. My 11-year-old daughter can point to where to trail that stop loss. That's so easy. It's 26.5. It's old resistance from an intraday perspective. It's new support on the intraday today. So if you are going to trail the stop loss, locking in profit, that underneath that 26.5 level makes a lot of sense. Underneath, 25.5 makes some sense as well. But it's like I said yesterday, Tim, it's going to be a volatile ride. Silver is not gold. It's going to be more volatile. But it's like I said yesterday, when it hits 30, I'll update the target to 30, 35. I believe silver's, starting something in bullish capacity that is not going to change in the short term. I believe these precious metals have price appreciation in front of them.
Keep adding it on technical entry points and all that kind of stuff. I think is the right mental approach here. Let's keep working through the markets here. Give me the dollar if you can next here, Noah, either UUP or the dollar index. I'm not sure. Did they get the dollar index working on Thinkorswim simulated yet?
No.
Is it still not working?
Still not working.
Yeah, it's messed up.
The old UUP is our ETF product that we go to, though. I got to tell you guys here, Matt, that 2-day is obviously not a pullback. It wasn't a bullish or bearish retracement. It did not hold. The dollar's down here again pretty healthily, and obviously those charts are very, very bearish. You've already talked a little bit about the inflation change, which I think is huge, Matt. Obviously, that will spill into our conversation on Monday in part 2 of our podcast about the future of currency. Anything you want to add to the dollar here? Just flat bearish, but anything from you, Matt?
No, I mean, honestly, the volatility to the downside probably shot over whatever the entry on the short was. Cody, would you agree with that?
Oh, absolutely. And we're seeing a break, and I really wish we could pull up $DXY if it was working, because there's a very clear line where it had this little small retracement, and if it breaks that next level, there's room to run. Each of the cross pairs that I've been watching that I've pointed out on the Forex report over the weekend, the euro dollar being a good one. They're all moving. They're all confirming. They confirmed last night about 5 o'clock or so my time, and they are definitely moving. The dollar's dropping.
Well, and you couple that with the euro breaking out of its high, clinging on that 119. You break above 119 on the euro, you're probably talking more pain for the dollar here with the break of 25 on UUP. So, I mean, that 25 handle on UUP is a fairly important support level historically. If that level is broken, it could get even uglier for the dollar, and it's been really ugly for the dollar recently.
Absolutely. Go to the daily for me real quick.
Hold on, we got a spy report, news report, whatever you want to call it here. Mark, what do you got? Breaking news?
Listen, the joke's gonna fall flat now. It needed to happen right,
Yeah, it was
right
in the moment.
on. I was gonna say Cody said the dollar's dropping, and I was gonna say breaking news. Peter Schiff just tweeted, "I'm shocked." So
Well,
that's my contribution to currency analysis.
there we go. But that chart right there on the euro dollar is very easy retracement to get into, so you can see where it's moved today. Noah, do me a favor, drop down to intraday. It was a nice setup throughout the day, quick and easy to get into. Right at that retracement level, the break was earlier today, about right. I would go down a little further, but that's the breakout retracement right where you are.
Mm-hmm.
So it was very easy to trade that, and it's up right now.
Mm-hmm.
And now the next break point is above the previous high, and then it can keep going from there.
By the way, another product that's also up here is Bitcoin as well. Bitcoin running towards that 12,000 mark again. It's had an incredible 3 weeks here.
I am just so insulted you moved from the US dollar to Bitcoin.
It's the way we do it, brother. Every
one's
time.
going down, the other's going up.
That's right. That's right. Bitcoin here, Mark, as we're approaching this 12,000 zone. Noah, give me a read on the chart here, because the breakout at 10 was much different. It was that long consolidation. The weekly chart had a cup and handle. And so you had the ability to kind of break, wrap, and run. And that's what it did. But now we're running into a new resistance zone, and a messy one and a choppy one back there from last year. I mean, Noah, how do you read that chart right there?
Well, just that. I mean, you got a really clean break with great momentum, but 12,000 is a big number where it has established resistance in the past. And I think you got a lot of noise of all the way between 12,000 and 14,000, where you have that other peak out there. So there's a little bit of noise in there. And I think it's going to continue to rise just based off of the weak performance of the dollar. And again, people out there love to speculate on the Bitcoin. And so now that it's gotten some momentum, I think we're going to start seeing people posting more buy Bitcoin things on social media.
Dude, you're already seeing it, dude. Listen, and we've been talking about Bitcoin for a couple of weeks, that it just feels like it's the environment. I mean, you see these parabolic moves up when you see open space in the chart, and there might be a little pivot resistance here and there. But man, this is the environment in 2020 where Bitcoin can make a big run. It just feels it.
Yes, but if you're out there and you're new to Bitcoin, though, I think it's got to be a reminder. Bitcoin can also have a 25% down day randomly out of nowhere.
Hey, what? And see, 2020 is weird. I'm now the Bitcoin bull, and you're the bear.
I'm not bearish.
What's happened here? That's the disclaimer I always give when you're
down is
pumping up Bitcoin.
Up is down. Cats and dogs living together. Mass hysteria.
No, I hate seeing the frothy fever, Mark, especially when things start popping on social media, because that was what got people pulled into Bitcoin before.
This market is absolutely crazy when Mark's looking at Disney and being like, no, I need a massive decrease in price for Disney, but Bitcoin breakout, let's jump on that train. Hey, dude, you don't get to decide the market you get. You just got to trade the one you got. So,
yeah. Moving past Bitcoin, though, I think it is going to be a really interesting run here. It's had an incredible couple of weeks. Let's go into individual companies. There's a lot in the news, mostly earnings, by the way. I do want to get down to some of those earnings announcements and releases and some of the data and the numbers here in just a second. Outside of earnings, though, give me a look at Novavax first. I do want to talk about this. Obviously these positive virus news headlines, NVAX.
What's NVAX?
They're working on obviously a vaccine. They've been in the news a lot here, Mark. The stock has taken off, gone incredibly parabolic to the upside. Go down to an intraday chart if you can here, Noah. Talk about the danger of false news headlines. Look at that tick. Okay. They reported trial results last night. Somebody, I don't know the news outlet. It might have been an AP thing. Started flashing a headline out there incorrectly, Mark, that it was a negative result. Novavax was down 32% after hours at one point. But actually,
can you imagine the investors who sold that based on that headline?
Right. On the basically on the over-the-counter market or something, 24-hour market. Look at that craziness. Now, I didn't read.
Does the media company have liability here?
So you're telling me the intraday range is from 100 to 200?
Oh, well, Mark, I mean, the media literally reported that this trial was a failure, basically, and it was viewed as a really, really big success. And just the misunderstanding of the headline caused massive, massive volatility until it was fixed. This is the irresponsible nature of the media. They should be held to account on this. It is absolutely ridiculous that anybody in the media could get away with something like this. I don't care that it was a mistake. It's nonsense. If you come back and say, oh, it was just a mistake, well, maybe you should spend more than the 6 seconds Coach Mark talked about in looking at those headlines, because they have real impacts.
Stop hiring interns to do your headlines, financial media.
Yes. Yeah, I support that. I support that law, Mark.
I have no interest in trading this company. I can't imagine wanting to chase it, but my God, look at that chart though here, guys. I mean, all on virus and vaccine type of news, but just on the interest, just even yesterday, one bad headline, the stock was down 30%. Then the good headline, now it's up 17%. That's just
a
not
90-point difference in a positive versus negative headline. That is intense. That's insane.
It's crazy. And they did report some positive, things about healthy adults with their vaccine and the trial that they're going through and all that kind of stuff. So
with this company, though, obviously it's had a great move, but only since the vaccine is one of the.
Oh, it's all vaccine. It's all vaccine.
Yes. After, let's say they have a successful vaccine and then they get a huge spike in profits and numbers, and the vaccine is distributed across the United States, across the world, then what? Then what do they have? One-hit wonders don't keep a company at these levels.
Yeah, but that's still way down the road.
I don't
disagree with that.
No,
I mean, I think you're going to see a lot of that in healthcare, which is where healthcare is one of the tricky areas of this market right now. We're getting these run-ups in positive vaccine companies for sure.
Don't do drugs.
Yeah,
I don't. I mean, I'm in the field and I'll trade these. No, I'll trade Pfizer and J&J, but that's because they're broad.
I honestly, guys, that is a wonderful point from Cody. He is in the field. He went to college to be in this field. He's an expert in his field. He's very good at what he does, and he does not touch pharmaceutical companies.
I'll tell you, Matt, you were talking yesterday about how your first trade was dumb. I'll show you one of my dumbest trades. And I was a brand new trader. I think maybe only like 8 months in, but give me NBIX, Cody. I ignored that advice in my first year of trading. And I go back to a weekly chart, like 2016, you'll see this. This was a drug company. I did not know much about it. Didn't look into companies the way I do now when I was a new trader. And you got to go back like 15, 20 years. They only had 2 drugs, Cody. They were a 2-hit wonder. And you see that? See that 2006
big drop back there?
That was me. I was long equity at that time in a trade or a position trade. I can't even remember. It was a dumb trade. Matt, when you're new, you do dumb stuff.
You just do dumb things.
You do dumb stuff, and the stock in one day went from like 70 to like 15 because they pulled one of the drugs, Cody. And if you pull one drug from a 2-hit wonder, it's not much of a company.
Hey, listen, and what you're seeing is how to turn a trade into an investment real quick.
Sure. I mean, guess what? If I would have held for the last 15 years, I would be up still. So I guess, but
well,
no.
Honestly, and I'm serious because we see it all the time. When a trade goes so bad that you've lost so much on that one position, that you're like, what else can I lose? But it's not about that. It's about that capital not working in a better situation. And one of my mentors taught me when I was a young trader, he I was in a situation where, I'd taken a beating on a trade and, I was like, no, I can only lose, X amount of more money. I mean, I might as well stay in the trade just in case it goes back up. And I know all of us have had that logic at some point. Right.
Oh, yeah.
And I remember him telling me, he said, Matt, it's not about that trade. That trade has nothing to do with anything. It's about the capital you have in that trade. And would you make the same decision today based on the analysis today that you made before the trade went bad? And the answer was obviously no. And so he said, well, then take that money and go put it in something that's going to make your money back.
Yes. You don't. That's revenge trading.
I want to reiterate what Matt just said there, because I think that's some real wisdom that is worth repeating. Would you make the same trade based on the current analysis that you have? If the answer is no, why are you in the trade?
It's an emotional decision you're making over money at that point.
And I think if you apply that in your trade management, and I think you will save yourself a lot of pain. So I think that's some real wisdom my brother just dropped. Look at that. That's 2 compliments in one.
I was going to say, like, let's just call the show the show.
Wait, Mark, are you under duress? Are you being held captive?
Listen, it's 2020, man. I'm buying Bitcoin. I'm complimenting Matt, trading
he hates
pennies.
Disney. He's buying Bitcoin, and he says something kind about his 2 brothers. I don't even know what to do.
It is the end of days.
Get me.
I'm going to go watch that great Arnold Schwarzenegger movie, End of Days, just because of this conversation right now.
I think you used the wrong word there. You mean shitty movie? Is that what you were thinking?
I said great, and I
heard
chose
what
my
you
words
said
carefully.
Apple Computer next, if we can here. Bank of America. Maddie, I know we want to talk.
What are we doing?
I don't even know. Apple.
Oh, wow. Give the news. I don't even know what to say on this one.
And Bank of America Securities downgraded Apple to neutral from a buy rating, basically saying, okay, we think it's run too far, but they also raised their price target on the stock mark to 470. So they upgraded the price target, downgraded the stock to neutral. There's a lot of positives about Apple, they say, but the reward to risk balance at the current price level is just out of whack. I get the logic behind it.
No, well, what they said in their downgrade was accurate. They were talking about valuation, where it leads to a massive degree of confusion as they raise the price target while they also simultaneously downgraded the stock.
They want to have their cake and eat it too, right?
I get it, but I guess messaging is very important to me. And I'll tell you, it's like I told Tim earlier today. I said, if you're downgrading a stock from a buy to a hold to a neutral, those are big distinctions. It's a very big, for example, if you're reading the newsletter and listening to Marquise in the newsletter every week, and you see us downgrade something from a bullish +2 to a bullish +1, we're still bullish on the position, right? We're just seeing something in the chart that gives us a little bit of concern. Maybe it's slowing momentum. Maybe you're at the top end of the channel, something along those lines. But when you downgrade something from slightly bullish +1 to 0 neutral, that is a bigger distinction from going from bullish to slightly bullish. And so it means something from a messaging perspective when you go from a buy rating to a neutral rating, far more than when you're just downgrading a little bit from a bull to a slightly bullish position. That messaging matters something. And how many times in that scouting report meeting do I always take into account, what does this downgrade or upgrade, what does that say to our community, right? How many times do I talk about that in the scouting report meeting? What does this represent to the community? Bank of America, you need to come into the scouting report meeting to learn something about messaging, because your message on Apple is all over the board. We're going to downgrade it, but we're also going to upgrade the price target. That makes no sense. And yes, Mark, they're trying to have their cake and eat it too. I get that. They're probably saying, okay, we're going to downgrade it because of valuation, but the euphoria of the times, we still think it's going to go up. I get that. But have some courage of your conviction, Bank of America. You look like a joke today to the investing community.
Marky, what do you think of the downgrade?
Listen, anybody that's been doing this for 5 minutes knows that valuations are stretched, right? That's not new news at all. Even post-tech earnings, which were really good, valuations are really, really high. From a trading point of view, that means nothing, right? Valuations, it's all about patterns and momentum and trends. They can last well beyond. It's the old saying that the market can stay irrational longer than you can stay solvent. You can take that in your favor too and realize that, hey, don't try to guess when a trend's going to end. So we know valuations are stretched. That doesn't matter from a trading point of view. From an investing point of view, that's been true for a while too. There's I don't think personally that you make an investing career at buying at high valuations, but I've been like that for 10 years. I'll be like that for another 10. So I don't think at high valuations, that's the time to, yeah, I'm going to build my 100% portfolio and to the moon from these high valuations from there. But that's always been true, and I believe it always will. So their downgrade does nothing from a trading point of view. We still trade the pattern. We still change the chart. Their downgrade just tells us what we already know from a valuation point of view. It's stretched. They're high. Do you want to invest at high valuation levels? That's a you call. It's not for me. It's not for a lot of people. I don't think it's a path to success, but that, you know, I mean, so I don't think they're down. I think their downgrade didn't mean jack and squat.
Me
Well,
neither.
it didn't mean anything because of the price upgrade, though. Like I have no problem with any bank downgrading any company based on valuation concerns. I have no issue with that. I don't care if it's Apple, Microsoft. Like I'm concerned about valuation as well. If Bank of America comes out today and downgrades, you know, Apple, I would disagree with the downgrade despite valuation concerns because it's Apple, right? Their earnings announcement last week was amazing. I mean, literally, truly amazing. So I wouldn't have downgraded them myself, but I wouldn't have had any heartburn if Bank of America comes out and be like, oh, we have valuation concerns. Where you miss me is price upgrade in face of a downgrade. I mean, that lacks all logic. It just lacks all logic.
Well, think about this. Last Friday on the 31st, you had so many upgrades in price as well as rankings from Apple on their earnings report. And the $470 price target at Bank of America is still higher than the buy rating that was upgraded on Friday from 1, 2, 3, 4, 5 different firms. I mean, it doesn't make any sense.
They have one of the more aggressive price targets on Apple now with their price upgrade, and yet they're down. It honestly, it's like, why does people listen to banks on their investments any longer? Like, how much evidence do you need? How many decades in a row do you need to underperform the S&P 500 simply because you have loyalty to Bank of America or Wells Fargo or Vanguard or Citigroup or BlackRock or Prudential or any of these other financial firms? How many decades of evidence do you need before you're like, I don't need to pay them money to handle my investments? At the end of the day, guys, if you don't want to trade, if you don't want to do the investing and you just want to park cash, you don't need a financial firm. You don't need the idiocy of the financial firms. All you need is the S&P 500. Just buy the spiders.
No, I mean, listen, if you are all analysts do, like seriously, like you go out, and I know, and I see rookie traders do this all the time, is that they see Bank of America just upgraded their stock and they're like, all right, that justifies my decision. All analysts do is chase price. That is really all they do is they chase price. So a stock goes up, they raise their target. Guess what? Learn to read a chart and you'll become better than any analyst out there, because all they do are buy. All they do is like, what is it? Like 95% of like analysts are like buy ratings or something like that.
Buy or hold.
Let me be very clear on this one. You don't even need to learn how to read a chart. You don't need to learn how to read a balance sheet. You don't need to learn how to read earnings reports. You don't need to learn any of that to outperform those paid so-called experts on Wall Street. You don't need any of that. Wall Street has this, and it's because we're financially ignorant in America. We don't teach financial education, but that's the only reason they get away with their nonsense is because American consumers, and I don't hesitate to say this, guys, because I think it's true. At no point in our history in America has American consumers been more financially ignorant than they are today. And Wall Street loves it.
Oh, we're 47 minutes into the movie Idiocracy in America. Make no mistake about it. America has become dumb and stupid as can be. Don't be part of that crowd. Take control of your own destiny, man. Don't follow these other people.
Elon Musk got a lot of criticism last week for saying something which I felt was a true statement. He said the American consumer doesn't work that hard any longer.
No.
And he got criticized.
Sorry. It's the truth.
But is he wrong?
No. Listen, I'm sorry. You have conversations, and I just hate to say this, right? But you have conversations with people around the world, And I just think that there's an enlightenment in many other cultures that we're lacking in our fast food culture. You know, that doesn't mean all Americans are like that. You know,
which is amazing because a lot of the people that criticize Elon has probably never been to China.
So, I mean, it's one of the things I love about tackle trading community is this community of like-minded individuals that, you know, it's finding groups that
Got to find
you
your
can
pod.
fit in. You got to find your pod these days to get good information.
By the way, speaking of like-minded individuals and community, I hear you were playing Rick Astley in the lounge this morning. Is that?
Listen, I wasn't playing Rick Astley. I was singing Rick Astley.
Playing, seeing, being Rick Astley. It's so
Listen.
good you can't tell the difference.
All right. All right. Are you going to sing?
No, I'm not going to do it.
All right, let's keep rounding through earnings here, Matty. Let's move on to Square next, Activision after that, if we can. Those two kind of grab my attention. There's others that I do want to break down. Let's start with Square if we can.
Yeah, let's start with Square. Square came in at 18 cents a share versus the expectation of a negative 5 cents a share. So a really good beat on EPS numbers. Revenue came in really, really hot, up 63.8% year over year. That is, again, what you want to see to justify these high flyers is obviously you always want to see a beat on EPS. That goes without saying. But you want to see those revenue numbers justify the growth potential here on Square, and up 63.8%, even though we've seen this stock. And yes, it goes without saying, the disclaimer, everything is crazy right now from a valuation perspective. But if you wanted to justify the upward movement in price we've seen in Square post-pandemic, you got what you wanted to see in their overall numbers with a 63.8% increase in overall revenue to $1.9 billion versus the expectation of $1 billion. Overall, numbers were really, really, really positive. I do not fault one person for locking in profit here, and that's what you're seeing after the cash open. Now remember, we've talked about these gaps many times during earnings season. It's not just the overnight action that is important when you're reading the gap range. When you see a gap that immediately starts selling after the gap, that is simple profit taking is what that is. And when you have that profit taking moment, you got to be a little patient. You got to wait for the proper setup. It doesn't mean you're bearish. It doesn't mean you're neutral. You're still bullish. You're just waiting for that next setup. I'd like a gap fill potential post gap here. You got that gap currently at 146, 147, all the way down to about 137, 140. I like that gap range coming back down here in between 137 and 140. You're going to retest that old resistance pivot. You're going to wait for that 9 EMA to catch up to it. Wait for Marty to bounce on the trampoline between 137 and 140. Then you might have a really, really good technical setup on Square. We got to see that retracement form. We got to see that support level form. We got to see Marty bounce on the tramp and confirm going back up. But this is something that should be on everybody's radar, waiting for that 137 to 140 support bounce. And if it never happens, so what? You missed out on it. But I think that's the proper setup here.
Yeah, I would love that. And whatever time it takes to develop, a couple weeks, a month, doesn't really matter when that develops. The technical chart
could be 4 days. You don't know.
We don't know.
You don't get to choose when the market wants to set up. Okay. And one of the things as a trader you need to learn is the art of patience. Some of the best trades you will ever make in your career are the ones you did not pull the trigger on. Be patient. Wait for a setup. Over trading is a risk to traders. Patience. Wait for the proper setup.
Yeah. Next one here, Activision, one of our favorite companies, Tackle 25, I believe they're Matty, out of the gaming sector. We've talked about gaming. Take-Two had their earnings the other day. We broke that down. I had a great report. Activision, the numbers here, Matt, what'd you see?
Activision came in solid on their numbers. I mean, there wasn't anything that was like robust, impressive, but they came in very solid on their numbers. 93 cents on EPS numbers versus the expectation of 63. So a really, really, really good beat on EPS numbers. Overall revenue came in at 1.9 billion versus the expectation of 1.7 billion, which increased revenue by 38.4%. And guidance was also kind of increased there as well. Square also increased guidance as well. I took the report as lukewarm. And honestly, I think Activision would have been up a lot more if it wasn't for a little bit of price movement on the backs of Take-Two's yesterday. So I'm not taking the selling today as anything other than, you know, just a little bit of profit taking following the robust Take-Two earnings from yesterday. I think we're going to be setting up here for a potential trade on Activision, and I think coming into Friday on that scatter report meeting, we're going to have a very, very good discussion on Activision, because I like Activision here, but you got to see it kind of hold that 90 MA, maybe even come down into the previous pivot right there about, I believe that's 82.25. So if we do see that 82.25, 82.50, 90 MA support level hold, that certainly could be gobbled up. If that does not occur, you got to wait for a high base. But Activision absolutely should be on everybody's radar.
We can go a lot of places next year, Matty. Monster.
Let's go Monster.
CBS. Yeah.
Yeah, let's go Monster. I got a question for you guys. Post IPO, Domino's Pizza, Google, Monster, who's had the highest price appreciation in the last 15 years?
What's my choices?
Domino's, Google, Monster.
I'll take Domino's because I think
I heard Domino's once before, so I'm going off of a memory.
Well, I know Domino's beats Google. I know Google's last. Monster's had a really, really good run in 15 years. I mean, you go back 15 years on the chart. I mean, they're cheap. I'm going to go Monster because I think Matt's setting it up.
It's not close. It's Monster. It's not close. Monster went from a micro penny stock to what they're doing today. So obviously a very, very impressive run for the last 15 years. And, you know, Monster, even post-pandemic, guys, I mean, Monster has, you know, had a ridiculous run from 52.5 all the way up to 80, now, you know, pricing in at the high about 84, currently at 82.50. Monster came in at 59 cents a share versus the expectation of 48 cents a share. 1.1 billion versus the expectation of 979 million. Revenue did decrease overall by less than 1%. I totally respect the company. Don't understand why this company is up on today. I might be missing something on their announcement. Did they announce a merger? Did they announce a split? The raw numbers don't justify what I'm seeing on the chart.
I did not
only go up.
I didn't dig into this one that much, Matt, so I can't answer that. Marky, you have any idea on that? Is it just
listen,
euphoria
no, I mean, it's a run. You got to remember the after hours trading is really, really light. And so what direction do they want to send it after hours? They get to decide. You know, it's like when we saw Microsoft, they knew that they were going to run it down on earnings. You know, it's just the opposite effect here with Monster.
Mm-hmm, mm-hmm.
There's got to be some here, because even on the cash open, they didn't even sell on the cash open. There's got to be something I'm missing in this report. They may, and it's not a company I follow tremendously. They had to announce something, because these numbers don't justify the price action we've seen in Monster.
Yeah. I'll dig into it, see if I can find anything on it. Next one here, Maddie. There's a lot that I want to talk about. Match, Beyond Meat, Planet Fitness. Where do you want to go?
Let's go high flying Wayfair here.
Wayfair. Oh yeah.
Let's go high flying Wayfair. Wayfair has had just an amazing run up. On the backs of all of us staying at home and refurnishing our home offices and all that jazz. I mean, it's just had an absolutely beautiful trend over the course of the last few months. And again, coming into the earnings season, the number one question I personally had was, can these high flyers justify their high flying status? And Wayfair, they not only justified it, they impressed here, guys. $3.13 a share versus the expectation of 76 cents a share. 4.3 billion on the expectation. 4.3 billion on the revenue numbers versus 3.7 billion on the expectation, which represents an 83.7% year over year, quarter to quarter increase in revenue. Raw numbers here on Wayfair, very, very impressive. What you guys' take?
I think you got to be impressed. I'm obviously bullish on the momentum. This is a growth company that has been that lockdown kind of darling. I mean, just look at the price performance. $21. We're now up at $300 from the March lows to right here. Numbers came in very, very solid, Matt. It's overextended. There's no question about it. I would not chase it unless you're bar by bar kind of trading that with some experience. But you got to love it. You got to keep it on watch list. You got to trade setups. That's the way I would.
No, I love the potential of a setup, and I might miss it completely, but I love the potential of a setup here, given the fact that I like their numbers. I like the fact that you didn't gap and run here, guys.
Yeah.
So the gap and running might have been from 225 to 300 pre-earnings, and you had a little bit of profit taking on the overnight. The cash open gobbled this up. I mean, literally, once it was selling off initially, cash open gobbled it up. But the trade here, in my opinion, is consolidation tight underneath 300. I would love 3, 4, 5 days of tight consolidation, clean trigger above $300. You can certainly momentum trade it above 301.50, and nobody would criticize that. But you know you're bar by bar and you're momentum trading that. So, but I do believe for most people, it would be a consolidation, tight range, trigger above $300. And, again, it goes without saying everything's crazy in 2020. But if you were looking to justify price performance on Wayfair, you got what you were looking for in the earnings numbers. That increase of 83.7% in growth, guys, that is what you want to see in the growth area of the marketplace. This is one of the reasons on Monster why I'm so concerned and don't understand Monster, is because they did not grow. That is a growth company that did not grow. Wayfair, growth company, show an amazing and impressive growth. Can they, the open question on Wayfair, and I think this is the open question on a lot of these types of companies, is can they maintain this type of growth? And it doesn't have to come in at 83.7. It can come in at 50, 60, 40, but can they maintain this type of growth post-pandemic once we do, start to see, economies reopening up, people getting back into their normal habits post-vaccine? Can they maintain this type of growth? As of right now, you got to be impressed with the overall numbers.
Absolutely have to be impressed with it. There's no question about it. Another company that I was very impressed with, Matt, that did not get the price reaction we were looking for was CVS. I want to get you both your take on this one. I don't know if you got the raw numbers on
You're
this.
You're not getting my take on this. Absolutely not. You are not getting my take on CVS. I asked you specifically if you wanted me to get the numbers on CVS, and you told me to get Beyond Meat.
I got the numbers.
No, you have the analysis.
I will do the analysis here. This is an 11 PE ratio company, Mark, that was under distress there for a long time. Came into the earnings report and they only expected, 1.93 on their forecast EPS number. They came out and beat it healthily, guys, and the revenue was very, very strong as well. I didn't really get the market's reaction to this one, Mark. I thought maybe we would have saw a breakout on a conservative 11 PE ratio company that came out and beat numbers in the face of all of the concern, but CVS did not get the breakout. Is that just because of these kind of companies are just out of favor right now, Mark?
Oh, absolutely. I've been advocating CVS for about a month now. To whoever would listen to me, if you like those boring dividend safer type plays, like I like a range. Listen, I like if this comes down, find support level, I'll probably buy some, because I like companies like this though, right? I like companies like this. So I thought it was an outstanding report. If you're following CVS, it's everything. All of their revenues across categories grew a little bit or a lot. I just
the retail side had to slow down though.
So beats on revenue. I like. So it's just one of those stocks, and you're seeing this a lot. Like Pfizer came down a month ago to about an 11 PE ratio. So, I mean, and then it got some vaccine news and got some momentum from some trading. Just these are the type of companies that no one likes trading right now. you know, and
It's
so
not one of
they're-
the cool kids for
it's
sure.
not one of the cool kids like AT&T. Like if you pull up AT&T's chart, it's a boring chart bouncing from range to top to bottom. You know, that's not an exciting chart, right? That people are like, blah, you know, but so it's just all amount of flavor.
Yeah,
Well,
I
let me
thought
just ask you a question, Tim. I mean, you're looking at
I-
the numbers and wondering why it's going down. They did have a slowdown in the retail side that was offset by their insurance premiums. But I mean, do you have interest in CVS?
no.
Oh, okay, then. So, I mean, that
Oh,
should
but
give you all the logic you need.
Yeah. You know, it's an $86 billion company. It's very conservative. Obviously, they're that kind of thing.
I get
And
it.
people just aren't,
Guys, I mean,
they're not interested.
I mean, Mark likes it because he's getting the numbers he wants from a value perspective. But I mean, revenue came in line versus expectation. Revenue grew 3% year over year. That's nothing to, you know, get too excited about. EPS numbers did beat very healthily at 264 versus 193. I got it as a mixed report.
Mm-hmm.
Listen, and they
Well,
raised,
the market did too.
you know, the thing I like about CVS is that you know exactly what it is, and you're getting a reasonable deal for it, and you're getting
Yeah.
a little bit of dividend. So it's one of those, like with Disney, it's like, I don't know, right? Like pandemic, when do parks open up, this and that? And I have to pay this really high.
Let's do the game then. Disney or CVS here, long term, holding time 5 years.
Oh, Disney.
Well, you guys are going to go to the names. I'm going to go to CVS because I'm going to take the zero risk in the trade, you know, so I'm not going to gamble.
Okay, let's never say zero risk because that's not an accurate
Okay,
statement.
fair enough. You know what I mean, though.
Well, I think but based on what we're seeing, I mean, you have as much risk in CVS than you do Disney.
I think CVS is a real nice conservative play. I do, you know, so I'm not going to buy Disney on a streaming headline that it's now a streaming play. Like, but I'm not going to I don't know. I for the last 5 months went under the thing that I am not going to guess when COVID-19 ends. I'm not going to guess when the impact of society ends. Hey, University of Connecticut just canceled their football season. You know, like
I didn't see that headline.
Yeah, University. They're the first college to say we're not playing this year. So you know, DraftKings down a little bit on the news because I'm not. I don't know how it's going to play out. I don't know if we're dealing with a mutation of the virus. We've obviously not handled it well here in the United States. And so I'm not going to pretend to know that when this thing goes away and impacts consumer or business behavior. And so that's the main reason I take CVS over Disney is because I have a really good idea this last quarter of what they look like in a pandemic. And so they'll probably look the same the next quarter and the quarter after. And so if COVID-19 is with us for a year and a half, 2 years, that's a lot of debt Disney has to take on.
Well,
right?
I get it. If you're parking money in a savings account, yeah, call it CVS. I'm okay with that. But don't expect much out of it.
I don't know. It's also a perspective. Like this is when, like, getting companies that you think have a bright future at a good discount, according to your metrics. That's what I think successful investing is, or at least that's how I like to do investing, even if it is not as successful as just smashing the buy button. So it's just.
I do have some history with this company. CVS is the only company one of the only companies we've ever removed from the Tackle 25 because they're piss poor earnings from last year, and that might be a little hangover for me looking at this company. I haven't really analyzed it much since then, but you know, for me, I like I said, I understand it. If you're parking money somewhere and you just want to get paid a dividend, maybe write some covered calls. CVS is a good candidate for that. I like the growth potential of Disney post-pandemic far more than CVS. Now, again, keyword potential, right?
Mark, CVS or ExxonMobil?
Oh, oh my God. Okay. And this segment of the halftime report is brought to you by the rhetorical question of the day. Like, listen, you can convince me Disney's a great company. COVID-19 is going to get over whatever, you know, how could you go wrong? Listen, I'm a huge fan of Disney, right? You know, the whole COVID-19 and blah, blah, blah. ExxonMobil versus CVS, that is not even a question. That is not even a question in my head, you know, because you don't know what ExxonMobil is.
Yeah.
at all.
The risk in the
You know
energy
what
sector.
you know what ExxonMobil did in the last 24 hours? They didn't cut their dividend. They stopped matching employer contributions to their 401k.
Are you serious?
They did that in the last 24 hours.
That's not a good sign.
So like, yeah, no.
All right. All right. A couple more.
Can I give you guys a couple text messages I've gotten in the last 24 hours?
Sure.
I just want to get your quick take on it. Okay.
Okay.
And I'm not going to name names or read verbatim here, so they don't know, but 2 text messages from people I don't know in the last 24 hours. Hey, Matt, I'm so-and-so. You might know this person who knows this person type scenario. I just got laid off. I have no money coming in. Can you teach me how to make a living trading?
Desperation does not
Sad.
lead. I mean, and this is the problem. And this is what I worry about, because I don't receive those texts because, I don't. It's really hard to get my phone number.
Yeah. How'd they get my number? I don't know these guys.
Stop going to those late night message boards and sharing. That's.
Oh, I've been handing it out, Matt, just so you know.
I feared it was Noah.
Yeah, for sure.
What was the
No.
second one, Matty? Same thing.
Same
basic tone.
Same
But
thing. But it was not. Okay, I put the "Can you teach me?" Okay, it was not "Can you teach me?" It was "Can you help me?" Basically, pay bills.
Right.
And I do get those emails to customer service every once in a while.
And I just feel bad.
And I see the stories on message boards the last 4 or 5 months. It's, I need to make money. And I'm like,
get it, but that desire leads you to lose money. And that's what I need to say to those individuals is it's not going to work. Get a plan B.
Yeah.
Right.
If you need to make, like, if
I want to tell the story real quick, Mark. I think it actually ties in very well. I remember when you were a professional poker player, and I knew how busy you were. You've always been a very, very busy person, and you played a lot of poker. You played online poker. You would even go down to a card room at times. This is like 15, 18 years ago, but you still kept a job, 40 hours a week. I believe at the time you were working at a gas station doing graveyards while you were still studying for college as well. But you told, and I even asked you once, I do remember the conversation. I said, why would you work at the gas station? You're playing poker. And you're like, I like having consistent income to be able to pay my bills.
Working the grave shift at the gas station was the greatest pickup job of women I ever had in my entire
Is
life.
that what the real story is?
like college town, work the gas station. Oh, it was tremendous. Plus I got free food and I got to study, and I was a late guy, and I got to play poker even while I was there. It was great. I did nothing. Got paid.
You don't want to put pressure. Yeah.
No, and it comes from, who's the great famous poker player? He wrote the Bible of poker. He won the World Series.
The guy that wears the cowboy hat.
Yeah, the guy that wears the cowboy hat. And I can't believe that I'm drawn that.
When you think of that name, you're gonna hate yourself.
I'm gonna hate because he's an icon.
Yeah.
But like he wrote something that's always resonated with
Doyle
me
Brunson.
Doyle Brunson. Thank you very much. And Doyle, he wrote a book that's referred to as the Bible of Poker. If you ever want to learn to play poker, even if it's just that book is so spot on and easy to understand and basic and just gets it. It's brilliant. And it's brilliant. And it's not written in a way that's, that a lay person can't understand. But he also wrote a lot, and he talked a lot about wisdom over the years. And he's like, because he worked a job. And Doyle Brunson was making lots of money, hundreds and hundreds of thousands, clear $1 million a year. I mean, he just, doing really well in poker. They're like, why do you work at the job, Doyle? And it's a philosophical thing. He's like, because if you always have money coming in, if you ever are having to force yourself to make money through trading, or force yourself through make money through investing, or force yourself through sports betting or poker or whatever it is, if you don't have a little income coming in, then you are really, really prone to do some of the dumbest things, and you are putting yourself in a position where the pressure of having to make a living can just implode your whole situation.
And what I want to say to these individuals, because this is just a microcosm that represents a bigger situation that we're seeing in America right now. Nobody wants to go through painful moments in their life. Nobody does. But those painful moments in our life, they shape us who we are for the future. There's good, I get it. People are going through a lot of pain right now. Absolutely. But if you use it to fuel the fire, to really attack this from an education perspective, so that you're ready to do this for the rest of your life and not just for a moment in time, you'll have a better life. It's okay to go through pain. Every single person that's in this webinar right now, including Mark, Tim, myself, and Noah, have went through moments in our life that are, we look back and like, that was some of the most difficult moments of our lives. It sucked. I hated it in the time, but it made me who I am today. It allowed me to grow. Human beings want growth. They want growth. Well, growth doesn't happen when the sun's shining and everything's happy and everybody's got food in their belly. Some of the most amazing moments in American history, guys, happens in the most dire moments of American history, because that's when we find out who we are in our hearts. We find out who we are. It's okay. Learn from it, because guys, yeah, right now we're going through something unprecedented that is scary, that is confusing, that is overwhelming, all of that. But we're going to get past this. And there's going to be moments in the future that are scary. Maybe not as scary as what we went through in the last 4 months. Okay. But there's going to be moments in the future that are scary for you as an individual. Use this right now to prepare for those moments. Because if I give that guy a hot tip, that guy's not going to make money, and he's going to blame who?
No, he's going to blame you.
He's going to, okay. My hot tip to that guy is going to be, put education first so that you don't have to ask that question 5 years from now.
Yeah.
Yeah. And listen, I've read, we've all read it, and Tim, you probably have read even more than I have. Message boards out there on all of your Reddits and this and that. I mean, story after story after story. Yeah, you have the stories where, hey, I bought 1,000 American Airlines out of the money call options and it had the bid week and I made all this. Yeah, there's a lot more stories, and they're starting to increase, of individuals that got laid off, turned to trading, and without education, because of greed, because of desperation.
Yeah.
Not only do they not have money coming in, they lost their entire life savings.
Yeah.
It is the mindset that you can't help the individual because they're not in the mental place.
What I am going to do, and whether or not because I don't know who this individual is. He got my name from somebody I knew when we were growing up back in Emory County. And I'm going to invite him to our Tackle Trading YouTube show tonight. That's what I'm going to do. And if he shows up tonight, and because I know he probably doesn't even know tackle trading exists. He probably just knows that I'm a trader. And I'm going to invite him to Tackle Trading, and I'm going to invite him to the show. And if he shows up and if he responds to me post, I'm going to give him a year of Tackle Trading on us. That's what I'm going to do. Okay. But he's got to show up based on the suggestion. He's got to message me after that, and he's got to show me that he values education before application. If he does that, I'll give him a year of Tackle Trading and see what he does with it.
You know, do you realize that if you have a $35,000 account and you grow that account at 20% a year, which I think is entirely possible, like I would debate it to the end of my day, do you realize you end up in like 25 years with like $4 million? And that's not even adding any money to it.
Yeah.
Like,
Mark,
I love the individual who is willing to grow their money, sacrifice their, maybe not go to McDonald's as much, Mark Justice, and put that, you know, double quarter pounder meal into your account and save money.
Mark, to go on that, we're going to have a webinar later on tonight about, you know, starting with low dollar accounts, right? For the rookie. And, you know, we're going to get wonderful suggestions out of you, Tim, Noah, you know, Coach Greg, Mark, you know, Emily, all those coaches are going to show up. They're going to give you wonderful advice. And at the end of that, I'm going to say, basically my message is going to be very simple. Guys, it doesn't matter the dollar figure you're starting with. because even if you do this the right way, and you don't chase the dream of getting rich and never worrying about money again, but you think about compounding a small amount of money on a monthly basis, look where you're at in 5 to 10 to 15 years from now. You have to have that perspective. It's not about the money you're making today. It's about the money you're securing for your future, for your family's future, and for your heritage. And that's how you have to approach trading and investing. It cannot be the P&L you make in one time frame of the market. You've got to have the perspective of the long term. Compounding small gains is life-changing if you do it month after month after month and you commit yourself to this. There is no magic pill here, guys. There's no magic pill. The euphoria of the high-flying stocks that we're seeing over the last 3 to 4 months, I hate to be the bearer of bad news, but it's going to end at some point. It is. Markets can't sustain this type of growth. It is going to end.
And Matt, I was on the lounge this morning, and we were looking at some breakouts that were struggling to have that oomph, like Netflix and Lowe's and Sherwin-Williams, and I think, because if you look back at the 4 years, we've been in a bull market, right? There have been times where, for whatever reason, COVID-19 or Fed's raising interest rates, you've had sell-offs.
Mm-hmm.
But when markets have ground up, and I use that word very carefully, I think there's a distortion new traders have over the last few months that it's always this crazy. Markets over the last few years, most of the times in their upward mobility, it has been this slow, consistent grind. This slow, consistent grind. And I think some individuals who are like, hey, I got these out of the money option strategies and they're just working well, those things get killed in a slow, consistent grind. People that don't understand theta and options. Hey, the stock, I mean, this is one of a new trader's worst nightmares. They're right on direction, but they don't understand options, and so they lose money. Because they're buying options and it's going up, but they're getting killed on theta because they're not buying the right amount of time and they don't understand how theta works. Like, we could have an upward stock market for the next 2 years, and individuals that had successful strategies in the last 2 months lose.
Mm-hmm.
Because they just don't understand that the anomaly of the last few months is an anomaly. Go look at 2017. Go look at 2019. Upward momentum, nice upward momentum, but it's this slow, constant grind, like the ladder guy on Price is Right. Just slow, go up the slope. So lots of money to be made in the market. Lots of money to be made trading. You just got to know what you're doing and not be greedy.
Mm-hmm. Mm-hmm. I'm looking forward to the conversation tonight. I think a lot of these topics and issues that we've been talking about here for a few minutes, we're going to expand on that and have a good panel. Very, very, very excited for it. And I got to tell you guys, I mean, if there's somebody in your life, I love what Greg says here. I invited my brother. We'll see what I send him the link. We'll see what he does with it. If there's somebody in your life that you want to invite,
that's
a great event.
That's what I just did. That's what I just did. I sent him a text. I said, hi, thanks for reaching out. We have a company called Tackle Trading. Check out the YouTube channel. We're doing a special webinar tonight for new traders starting with low dollar accounts. I hope it helps. There is no magic pill, but small steps over time can certainly help.
Yeah, I love it. I love it. I love it. We got to keep moving through a couple more companies here. I know we've already been talking here for a bit, but there's several that I do not want to miss here today here, Matt. One of them is Match.com. Mark, famously, you've been bullish on this company for a very, very long time. MTCH there, Noah. Matt, what were the numbers on Match?
Raw numbers, and let's get you guys' take on it. Raw numbers, 51 cents a share versus expectation of 49, 555 million versus expectation of 533. Revenue growth was 11.5% year over year. Those are the raw numbers. Obviously gapping out and running a little bit. Number wise, I took it as very lukewarm here.
Mm-hmm.
Yeah, I mean, I like the space. They were reasonable numbers. They weren't fabulous numbers. Once again, I think this is a little false euphoria. Like, I like the company a lot. I like the space. I think they have dominant brand names within the space. And it's really, really, really hard to get in the space. So I think there's this huge moat. it's a little stretched on valuation. Good company, great future. It's just a matter of, do you want to chase valuation? But reasonable report. But I just love the company. I love companies when it is almost impossible for another company to get into their moat. And Match.com, they own all of the online dating properties that are worth a darn almost.
They really have a monopoly in that space.
And so pretty soon they're going to be called before Congress, and they're going to be like, so the Tinder. So you swipe right, and that means that you want to go on a date with them? Is that what it means?
Well, speaking of Tinder, revenue at Tinder, which obviously Matt Jones, did rise for the third straight month despite COVID-19 numbers.
So
people still dating.
It's not
pandemic.
a bad report. Like the raw numbers in Match is not a bad report. It's what I don't understand is why Match breaks out of 110 after running into 110 and is up another 12%. 12%.
Once again, it's just overnight stuff. Yeah, it's the same thing with Monster, right? It's just they decided they wanted to run it. That's all it is.
Mm-hmm, mm-hmm. Next one I want to talk about here, Matt, Beyond Meat, obviously a very popular name just from a trading perspective, tends to be on people's radar. What do we see from their report?
Beyond Meat came in at a -2 cents a share versus the expectation. Somehow Beyond Meat came a really boring report. Like it was unexpected to have Beyond Meat have a really boring report, but it was a really boring report. -2 cents a share on the actual raw numbers, -1 cent on the expectation. They came in at 113 million in revenue versus 97 million. Year over year, quarter to quarter, they grew at 68.5%. So the 68.5% is a really, really, really good number for a growth company. They just came in really, really average on their EPS numbers and their overall revenue versus expectation.
Mm-hmm. Kind of a boring chart at this point as well. Not only the report, but now it's kind of stuck there in between those two different pivot points. I don't see much.
It might not be boring if it breaks 120.
Yeah, I was gonna say 120. Clear support zone. Listen, the last 2 days, that was run up before earnings that we've seen so many times in the last 4 or 5 months. Mm-hmm. Let's run it up before earnings because no shorts. Shorts have been, I don't know. Are there any shorts left in America, like in the world? Does anyone short anymore?
Okay, let's do the game. Over under 15% short interest on Beyond Meat. What do you guys think?
I'd guess under.
Oh, 15%.
15. I did not know what the short float before.
I don't know what it is either.
Listen, I'm gonna go over because the fundamentals on this company are so terrible that I think that there's
so much.
Well, the company, no, there's overvalued. Listen, there's Apple overvalued. Do I want to pay this really high ratio for this really great company? And then there's Beyond Meat. You mean
a negative P ratio and a forward P ratio of 233 doesn't whet your appetite, Mark?
Yeah. So listen, I think there's some brave souls out there. I'm going to go the over 15%.
I would have guessed right around that. That's why I picked 15, but it actually is 12.3. 12.3. Tim wins a game. Look at that. Tim wins 2 in a row. He nailed the Disney analysis. Now he won. He beat Mark on a Beyond Meat. What's going on? I mean, the world is upside down right now.
August is my month.
August is your month. Mm-hmm. Give me a weekly chart on Beyond Meat real quick, guys. I'm seeing, and this is why I kind of like that 120, support break here.
Change that to a weekly real quick if you can, Noah.
What's your technical read here on that weekly chart? What do you guys got? Trend pattern, Noah, break us down.
Noah's on mute. I kind of wanted to see
felt like I was on mute. Yeah, I'd go on forever if you let me. I think you got a nice support resistance zone there in the 120 zone, 120 price zone. Price is popping up. It's above some of those weekly moving averages, and that seems like a pretty good line in the sand. If I were approaching this, zone. Yeah, for sure. Like that's where I would place stop losses and things down below that support zone.
And that's why I like a short trigger underneath 120, because that is the obvious level those investors would place a stop loss underneath is 120.
Dude, isn't that why that works? That weekly is not bearish though. I get it if
No,
it
it's
does
not.
break down, but that weekly,
I'm sorry. I do.
That-
I got it as a head and shoulders reversal pattern.
I see that on the daily. But if you, I mean,
No. I got that on the weekly. You have a double bottom at 120. You have a left shoulder at 140. You have a kiss at 140 this week. I got that as a head and shoulders on the weekly too.
Yeah, get your
You got a horizontal support level on a weekly trend. That is, yes, that's consolidation neutrality, which leads to reversal patterns. Listen,
I'll take the other side.
if I have to teach you technical analysis right now, I can.
I think a break of 140 is tradable to the upside.
Oh, it is. It's tradable to the upside, but if it breaks support, Matt's right. There's a whole lot of stop losses sitting down there. It'll drop towards the 200 period.
If this, if that, I get it.
It's an if-then scenario, right?
Yeah.
All right. Yeah. Okay. Let's hot dog this. All right. You want to go above 140? Okay. Which one hits first, 100 or 160? I'll take 100.
Dude, Mark,
I'll take it in a pandemic.
Mark, 100. You taking 100?
I'll even give you
I'll take
the
160.
edge to 160.
I'll take 160.
I'll even give you the edge.
I'll take 160. I'll take 160. Yeah.
What are you guys going to bet?
If
he owes 14,000 steak dinners, so one of those.
We have to do something outside of food. How about this? If it goes to 160, Matt has to come bring his power washer up and clean the tire tracks off my driveway.
Okay.
Ooh, I like
that's
labor
fair.
bets.
That's fair. He wants me to bring my power washer up there.
I want you to.
He wants me to bring he wants me to go up there and remove all the tire tracks. Okay, that's a fair bet. That's a fair bet. What do I get?
One of the steak dinners. How about that?
No. You have to run me through anything I want in Warcraft for the next month.
Nah, not a month. A week.
2 weeks.
A week.
2 weeks.
A week.
2 weeks.
Dude,
Yeah,
power wash the driveway
is
2 hours.
Yeah, but like you want to do it anyways. This is a fair bet for you. This is a free bet.
All right. Here's the thing.
And for those of you who are tap trading, we like gaming.
We love games. Yeah, we love games.
games.
A Beyond Meat steak dinner would be a good bet here as well. If it hits a certain target, maybe we'll have to actually buy.
I will make you a Beyond Meat steak dinner. That's what I'm going to do for you, buddy.
There you go. I like it. Last one for me, Matt. I want to talk Planet Fitness. I know this has been on Mark's radar for a while as well. Did you get numbers on Planet?
I did. I got numbers on Planet, and Planet Fitness came in at a negative 32 cents a share versus negative 17. Revenue came in at 40 million versus 87 million on the expectation. Just disaster numbers. They did see a negative 77.9% decrease in revenue. It's almost like Planet just wanted to up the airlines in the energy place from last week. I see nothing here from a buy side mechanics, and I see everything here for a potential short underneath $50.
100% agree.
Planet Fitness was a few weeks ago, like I said, and I was pounding the table. It was my favorite short in the market because you had so many distressed industries. Its chart was higher up relative to its historic price compared to your casinos and restaurants and airlines. It just got lifted up higher, and so it just had a lot further to go down. It's not at the bottom of the chart like airlines and casinos and and cruise lines who are near the bottom of the range from the March lows, up a leg or so. Planet Fitness was elevated from that just because of kind of a statistical anomaly. There's real concerns with gyms, right? Not just with the pandemic, but like lifestyle change. I read a stat, like over 50% of people do not, even after the pandemic is over, do not expect to renew their gym membership. I mean, like if you even have a quarter of that being true, that's a huge dent in the growth story of Planet Fitness. Yeah,
it's an ugly chart. Now you post earnings and you've broken down below moving averages and support. I see the downside as well here, Matt, from a trade perspective.
I honestly, I'm a little surprised Beyond Meat not Beyond Meat, but Planet didn't gap and run here.
Yeah.
That's how bad those numbers were. And I think Mark makes a wonderful point where, unlike some of those other distressed areas of the market that, shorting has been gobbled up on those violations of support at those low levels, Planet Fitness is not anywhere near the low levels that the airlines and the casinos are, and those types of those other areas of distress plays here. These raw numbers in Planet Fitness are garbage, fundamental, just garbage. And Planet Fitness is already in a very, very difficult economic situation. I think the lack of the gap and the lack of the run, obviously that shows you a little bit of, bullish fighting a little bit, but I kind of like it. I would love a couple more days of consolidation coming into that Friday meeting, in the scouting report meeting.
Mm-hmm.
I think every one of us would have a short potential on Planet Fitness if that does that. Underneath $50, I mean, you really don't have that next support level till about 46 and a half, which you certainly have the return to justify a violation of the 50 down to the 46 and a half handle. That would be your target number one. Target number two would be the retest after that bearish retracement down around 36. I mean, so if you're looking at 46 by 36 as potential targets here, that's a home run down to 36. So, I like the potential of a short here. Obviously, shorts is not working great in this euphoric market condition. But this is also a company that, is now in a bearish downtrend. It's hugging that 9 EMA on the downside. Every time it gets between the 9 EMA and the downward moving 20 period moving average, it gets beat back down. Now you're sitting at that very, very significant whole number right there around $50, a violation of 50. I think 46 down to 40, down to 36 is logical here.
Yeah, I like
Listen,
it.
I've reconsidered. I'm taking Tim's side of the Matt bet because August 5th, hey, listen, a broken clock is right twice a day, right? I think August 5th is that day. So
Is Tim's
I think,
day?
I'm not going to go against Tim on August 5th.
No, give me the whole month, by the way. August is my month. It's the
That's
month of Tim. It is the month of Tim. We're going to let that play itself out. By the way, guys, that's all I got here from a news perspective here
One
today.
thing, since we're talking beyond me, let's go to Wendy's real quick. Wendy's came in and showed why investors were justified in a nice conservative play at the bottoms. Revenue's down a little bit on Wendy's. We're at resistance, right? Always a hard time when a stock's at resistance. At earnings usually takes a little up. I like Wendy's a pullback to that horizontal support line in the 200 if it occurs. Downward mobility might have that. If I get a nice reversal pivot down there, it was a decent earnings, and it gives you highlight that, listen, Wendy's is pretty much what Wendy's is in the pandemic, down about 6% revenue. But, and this was the thing that blew me away on Wendy's, on why I like Wendy's so much. And I mean, I like Wendy's at the bottoms. It was one of the big first companies I called. There was a Wendy franchisee that declared bankruptcy that owned a lot of other things as well. And I was just like, what a beautiful business model where your franchisees can declare bankruptcy, but they still pay you their payment. And so you don't have to take any of the risk and you just get to keep collecting the payments. I was like, that is some Visa type MasterCard business model that I like. You just collecting the money with no risk. I liked that a lot. So if it pulls down to that horizontal level around $21, get a pivot. I like it for a little support bounce there.
Dude, I haven't had a Wendy's burger in maybe years, and I loved them when I was a kid.
Dude,
I don't know why.
They're still good. I mean, listen, Wendy's burger is unique, right? And it's not like one of those like elite, like if you go to a Five Guys and get one of these big stuffed burgers, it's not that. But I think for fast food, it's about as good as it gets in fast food.
Mm-hmm.
Don't you also like the potential of a breakout of 24 on
Oh,
Wendy's?
absolutely, 100%.
You break the high there, Matt. You got clear air.
But surprise, I showed the pullback potential instead of the breakout. What a shock, right?
Shocker of the day. All righty, Maddie, let's start moving into final thoughts here. Noah, you first, sir. What do you got? What's in your mind there?
Oh, well, this is just one of those things where with the broad market condition and the general disconnect from a lot of those fundamentals, I would just say be conservative on your position sizing and stop losses. You got to have some protection in place because I think the market's going to continue to rise, and who knows to what end. But I'm growing more and more concerned of a correction at some point. And I think a lot of that comes down to what kind of deal we see coming out of the.
God, I like having Noah the bareback. I like having no other
I get
bareback. It
nervous.
feels good.
It feels good to win, but you want to keep it, don't you?
Yeah, listen, my final thoughts. I don't have anything to add. Cut and paste what Noah just said.
Yeah. Okay. Matty, you?
No, just getting ready for the webinar tonight. We're gonna have a lot of fun. We're gonna hang out. We're gonna have all the coaches there, so get excited for that. Let's just have some fun tonight with all the coaches in the tackle community, talking about rookies learning how to trade and doing it the right way.
Yep. 4 quick charts from the scouting report. If you're a pro member at Tackle Trading, you already know these reports are just the value of the education and the way that the coaches break it down. We put a lot of work into them. Newmont Mining from over the weekend, just obviously with the run up in gold and silver. Newmont is catching a bit here, breaking above the high there. PCAR, PCAR, if you can here as well, pushing up towards that resistance zone. I'm really liking that setup up there on momentum. Palo Alto, PANW, just a beautiful, beautiful breakout there. One of the better performers here today. They actually caught an upgrade from an analyst. And then one last one here, NVIDIA as well was on the option report, and loving just one of the better performers for the week. Now that one, you would have wanted to play it on Monday, but it's a good reminder. Every day, other stuff is developing. You use them throughout the week. You use them as a watch list. Use them for the education. And if you are not yet a member of Tackle Trading, there's a 15-day trial link in the comments below. Come and join us. Go and review those weekend reports. All right, guys, that is it for today. YouTube issues aside, I thought it was a wonderful show. Hopefully YouTube fixes it. We'll be back tonight, 7 o'clock Eastern. That's when we'll go live. Looking forward to it. Everybody else, we are out for now. We'll see you then.